Hello to all my fellow investors. Today we're going to take a closer look at Lockheed Martin stock ticker LMT. The need to defend territory and the desire to wield power is as old as civilization, and military advantage has always played a significant role in human affairs. Essentially, LMT's products solve a timeless problem that its primary customer, which is the US, cares about deeply. And right now they are trading around $447, which is up around 18% the last year. If you compare that to the S&P 500, it has massively outperformed it, but during the last month it's actually slipped quite a bit, -7%, while the S&P 500 is actually up. If we take a look at some of the analysis consensus, there is a good chance they could continue doing so in 2023. You can see here defense equities have become a safe haven in this uncertain global economy, given Russia's invasion of Ukraine as well as its concerns over US-China relations. If we jump into the income statement, you can see the revenue has gone from 49 to 67. So they are growing their revenue. Coming down quickly just to check the EBITDA, it's around 9 billion. We'll get back to that in a few seconds. You can also see they are really good at making a profit. You can see the return on common equity is around 55%. Anything above 15% I would say is really nice. So to see here that we are 55 is extremely nice to see. Pulling up the cash flow statement, you can also see the net income is also growing, which is again nice to see. The cash from operations gone from 6.4 to 9.2. Capital expenditures 1.1 to 1.5. So there's a lot of free cash flow being generated from LMT. Also something that is extremely nice to see. If we come into the balance sheet, cash and cash equivalent 2.4 billion. Going down here, you can also see that we do have some shares outstanding that are decreasing, which is again something that we really want to see as well. You can see here that the total debt is around 13 to 11 billion, depending on where you look at. If we compare that to the EBITDA from before of 9 billion, you can see here that it's roughly the same, like 1 point something, 1.5 around in that case, and anything under 3 of this ratio is really good. So next up here is our stock screener, where we'll also try to evaluate the stock. We have 6 different valuation models that I will go through. So let's take a closer look here at some of the fundamentals from LMT. You can see here the PE ratio non-GAAP forward is around 16.6, which is roughly in line with the 5-year average. And you can see the beta down here, 0.7, also shows that it's not a very volatile stock. It's also worth to highlight that the analyst target price is $480. So according to the analyst, there should be a bit more runway from the current 447. But let's take a closer look at some of the dividends data. We haven't seen this one before. This is a new addition to the videos. You can see here over the last couple of years, if you go back to 10-year growth rate, it's around 10.6. 5-year growth rate had gone down to 8. 3-year growth rate of the dividend 8, and then we have the different years 7.55 in the last time when they increased it from 21 to 22. So you can see here on the graph that the rate is slowing down quite a bit compared to the start, but it is what it is. They are still growing the dividend, which is what we like to see. The dividend yield is also gone down. Obviously, since the price has gone up, the yield goes down, and you can see here the 5-year dividend yield. When it's red, it should be undervalued, and when it's blue, it should be overvalued. So according to this, if you look at just the yield, it should be a pretty safe time to buy it, roughly in line with the 5-year average, and also pointing back to the PE ratio, which kind of says the same. Looking over a long time, you can see here that LMT has outperformed the S&P 500, LMT being green, and the S&P 500 being the red. But if we look into some of our valuation models, we have gone with the growth rate of 7.85, in line with what analysts think, and the intrinsic value is 3.21. If we're doing a discounted cash flow model, I also apply the same roughly 7% of growth. You can see here that the growth from the different years in free cash flow, the lowest one being, apart from the negative ones obviously, the lowest one being 10% positive. So this should be probably okay. The average growth rate over the last 10 years is 80, which I feel is too high to use. So in this case, we are predicting all these into the future using some math, and then we are discounting that with our discount rate back to present value, summon together all the cash and the total debt they have to get an equity value, and Doing this, we get a fair value of 566. Using a dividend discount model, we put in the dividend payouts from the different year, we gather an average growth rate, combine that with the weighted average cost of capital, you get an intrinsic value of $416 for LMT. If we do a multiples valuation and compare it to some other defense contractors such as Raytheon, using the PE multiple from them, take a median, combine that with our current EPS, and we do that, get a stock price of 412. We also have the free cash flow valuation, which has the price to free cash flow ratio from the different years. Combine that with a free cash flow per share, and we get an intrinsic value of 518. The last one, Peter Lynch model, where we get a intrinsic value of 282 based on the growth rate, the dividend yield, and the current PE ratio. Before we get into the summary, if you have come so far, thank you so much for watching this video. Please like the video and subscribe to support the channel. And let's jump into the summary, where we have all the different valuation models combined with an average intrinsic value of 419, the current price being 447, which means that the average current discount is negative 6.5. If we put in a margin of safety of, let's say, 10%, that means the acceptable buy price gets to 377. So if we look at this, pretty much in line with the value right now, being the PE ratio is in line with the average. Also shown this graph here, that the yield also suggests that the current price is in line with the average. I would say it's pretty fairly valued right now. So if it pulls back, let's say 10-15%, I would probably go for a buy, but at the current price, I would hold out a bit. Thank you so much for watching once again, and please don't forget to like and subscribe to the channel.